Like I said, thanks everybody for joining. My name's Keegan, sales manager here at Ontech Systems. Those of you that know me, our goal of these is education. We've got John Shepard with Visance and then Cooper with Evolved. So I'll let those two kind of quickly introduce themselves, and then we'll get into the meat of the presentation today.
Perfect. All right. So yeah, thank you for joining everybody. Happy, that you're able to take some time out of your day and learn a little bit more about the cyber insurance world. My name's John Shepard. I'm with Visance. As Keegan said, I'm a risk management advisor. So we're headquartered here in Heartland and help folks like you kind of with all of your insurance needs. While I'm on the risk management side and help folks with property and casualty insurance. We also have an employee benefits team, financial services team, and then also for key stakeholders and employees, we also have a personal lines team. So really kind of one back to Pat. And happy to be here today to, help educate on cyber liability. As part of risk management, cyber's a huge risk that all businesses really do need to consider. So to be able to do something like this and kind of help educate what's going on in the market and kind of where we see the market headed is something that, we're grateful to be able to do. So, I'm going to be introducing Cooper here in a second. As an independent agency, we have really good carrier partners, and Evolve MGA is definitely one of the best cyber providers out there. And Cooper's gonna, really take us through the market update. He's one of the most passionate guys about this topic that I know. So I thought, he'd be a great resource for us to bring on the webinar today and just provide the education for you guys. So I'll hand it off in a minute, but I'd kick myself if I didn't say it beforehand. I've known the Ontech, group for quite a while, and to be able to do something like this for you guys, I think just shows how, they're a true partner to your organization. Not all folks are doing things like this. So, if I were in your shoes, I'd be very grateful and excited. So with that, Cooper, I'll kind of hand it off to you to go ahead and take us through what you got.
Well, thank you for the introduction. As John said, my name is Cooper Hawes. I'm a production underwriter with Evolve MGA, and we are a cyber specialist MGA based out of San Francisco. So for all of you non-insurance folks, what that means is we are basically like an insurance carrier, although we're backed by Lloyd's of London, the birthplace of insurance, and have financial groups that pay our claims rather than our organization paying our claims. But we're the ones that are in charge of distributing the product and ultimately seeing submissions come in the form of businesses through our partners like John at Visance and evaluating their risk to determine if it's a business that we want to offer cyber coverage to. If so, what are the restrictions or what are the non-restrictions? What is the scope of coverage going to look like? And ultimately, what are we going to price the premium at kind of in accordance with their risk? So my experience in the insurance industry has only been cyber. I originally started on the underwriting team, learning this process of evaluating risk, the different rules for certain industries that we do like, that we don't like, kind of learning all the background to it. And since then, I've switched over to a sales role. I spend most of my time, communicating with people like John, finding deals, educating them on things that are going to work really well for us, helping John keep an ear to the ground in terms of the cyber market. And then the flip side of that coin is just education in all forms. We do a lot of the Big I, which is essentially associations of insurance agencies. We do CE courses there. We do a lot of webinars like this. And I always find that cyber is something that people are always looking to learn more of. And so it's a pretty fun topic to be able to educate on. So with that being said, we're going to spend about 15 to 20 minutes today going through some basics of cyber insurance. So we're going to start off at the very fundamentals. What is cyber insurance? We're going to tie that into the current state of the market by looking at some of the trends from the FBI's Internet Crime Report and some of our cybersecurity partners. And then we're going to look at some trends of ransomware, which is the #1 most frequently occurring type of hack attack and also the #1 most severe, and follow that up with some social engineering claims examples, give you an idea of how people are getting tricked into sending money to fraudulent places, as that's the second most common type of attack. And again, we're going to wrap it all up with a little bit of closure and summary at the end, and then leave some time for Q&A. So feel free to hold on to questions, type them into the chat. But at the end, we want it to be interactive. So feel free to start thinking of those questions as we go through. So, as I said, I like to start at the very fundamentals. I think that it's really helpful to understand what exactly this type of insurance is covering, who it's for, and what the scope of coverage is. So, at the very basics, what is cyber insurance? Cyber insurance is essentially just a commercial insurance policy that businesses can buy to protect your intangible assets. And when we say intangible assets, what we're referring to is the data on your network, your servers, or even good cyber policies will cover physical data, but also your bank accounts. So it's not just coverage for people that are very reliant on technology, not just coverage for those who have a lot of sensitive data like credit card information at a hotel or a retail shop, or health information at a hospital or physician's practice. It's for anyone that is interested in protecting their bank accounts, who are sending and receiving money, as that's exactly what's going to be covered under these policies. But to give you some more background about the nature of this type of insurance, I want to direct your eyes to the bottom left side of the screen so you can see this pie chart. And this pie chart outlines Evolve's claims payouts over the last 9 years since we were founded in 2016. And you can see that 96% of the claims that Evolve has ever paid out, 96% of our costs have gone to first-party coverages, whereas inversely, only 4% of our total costs have ever been paid out to third-party coverages. And this will be really helpful because the anatomy of a cyber policy is divided up into 2 parts, first-party and third-party. And the easiest way to understand this is that first-party coverages are going to be all the costs that your business incurs directly for you experiencing a cyber attack. Company A gets hacked. We have to now hire IT forensics experts to go in and analyze their network, find out what happened, try to remove any hackers. If there's any sensitive information, such as credit card information, healthcare information, or even just employee information like W-2s that potentially got accessed, we're going to have to bring in a team of lawyers, data breach attorneys, as we call them, to help us figure out the legal proceeding. If your entire network gets shut down and you can't operate and that leads to lost profit, you're going to be reimbursed for lost profit. All of these are first-party coverages. Again, the costs that you incur directly, and they're inherently the most important for your business. And of course, they're accounting for 96% of all of our claims. But it's important to understand this because third-party coverages are included on most cyber policies. It's also the bulk of what you're going to get in a package policy. So right now, one of the biggest dilemmas that people like me and John go through is convincing business owners that the add-on cyber, the package cyber included on the package of the rest of your insurance is not good at all. It is very scary to go in the direction in terms of thinking that, something is better than nothing. Because oftentimes you're going to be charged, maybe just a few $100s for this add-on package, but they're only going to give you the least important coverages. And I like to point that out because it's almost always the third-party coverages that are included on those packages. Today's day and age, you really need a standalone, single monoline cyber policy to cover all the exposures that you're looking to cover. But third-party coverages, in a nutshell, are essentially just passing along a virus to another company and then being liable for all those damages. For example, if Evolve gets hacked and we pass along that virus to Visance, that would trigger Evolve's third-party coverage. We're now liable for the third-party damages that we passed along to Visance. It's really just not that common to see those types of attacks anymore. If any of you guys dove into cyber attacks kind of when they were first starting to pop up in 2016, 2017, there's an age-old example of Target having a huge claim where all of their credit card information from multiple stores was lost because an HVAC contractor was working at one of their locations and was connected into their network to carry out their job in some way, and they were already hacked, and that passed that along to Target. That was one of the age-old examples that we always share with people to help them understand what happens in these situations. However, that's just not happening quite as frequently anymore. Our hypothesis is that hackers are getting much more sophisticated at what they're doing, and they're realizing that they can target small to medium-sized businesses directly, find out how much money they can extort from them, take as much money as possible, and then just move on to the next. It almost seems as though it's not worth the hacker's time to try to jump across multiple organizations. But now shifting gears over to the right-hand side, you can see some more Evolve claims data from this last year, 2023. And for a frame of reference, we process about 150 cyber claims a month. 50% of which are ransomware. And I'll dive into exactly what that is in a moment. But this is the #1 most frequently occurring claim, and also hands down the most severe in terms of cost or loss. Now, the second most common type of claim is social engineering or the theft of funds. For Evolve, this is about 35% of all of our claims. And in a nutshell, this is just sending money to the wrong place. Whether you get tricked into sending money to someone that you weren't intending to send any transfer out at all, whether you got tricked to sending money to a fraudulent account instead of an actual person that you were trying to pay, maybe the banking information got changed, or in the other direction, that someone got tricked into sending the money that they owe you, your accounts receivable, to a fraudulent account. It works both ways, and that's kind of why we always reference it protects your bank accounts, because these wire transfers soon will be in your bank account. But for us, the average cost of ransomware right now is about $260,000. That is primarily because Evolve really only specializes in writing small to medium-sized businesses under 250 million in revenue. We really don't like playing with the large Fortune 1000 companies. That's when you start to see the $40 million ransomware claims, and it starts to get a lot larger. So just know that when we're referencing the Evolve's claims data, it's really more for businesses your size. Claims can be bigger. This is just our average, but some of the cybersecurity partners that we have that I'll cite in a moment will be working with a little bit larger businesses, so you might see some larger figures. So now I want to go through some of the data that we have from Coveware, one of our cybersecurity incident response partners, as well as the FBI's Internet Crime Report from 2023. So to start, Coveware has reported that the average ransom payment for clients that they work with in Q4 has been roughly $568,000. And so to give you an idea of ransomware, this is essentially just when a hacker is able to download a virus, or more accurately coined, a malware, onto your system and lock everything down. Every computer, every connected device, every single piece of data is going to be locked down and held for ransom. They're then going to message you and say, hey, we have locked down your system. We want $568,000 in the form of cryptocurrency, and we'll give you your data back, or we won't sell it, or we'll just unlock it. Whatever their play is with your particular type of business, they're going to give that back to you in the form of a decryption key. But again, $568,000 right now is the average ransom payment. So this is really only the tip of the iceberg when it comes to ransomware claims. There's so many more costs associated with this. And oftentimes having a ransom payment involved means that that could just be one single payment in the form of cash to a hacker that you might have to pay to get your business back up and running. Now, luckily, this is almost always covered under a good standalone cyber policy. However, you do want to make sure that you have appropriate limits. Other carriers might give you 100,000, 250,000, anywhere up to 5 tens of millions. But it's important to understand that even though you may not even have $568,000, that could still be what the hackers ask for. They're not always reasonable in that way, or maybe they know things that we don't, that maybe they will be able to squeeze that kind of money out of you. And a lot of times, if you don't have this, then you're going to have to pursue other routes of getting your business back and getting it back up and running. But to give you some scope of the US market as a whole, the FBI's Internet Crime Report from 2023 just came out about a month ago. And this is really the best aggregation of cyber claims data that we have. It's not a requirement for US businesses to report losses to the FBI, but it is highly suggested. It's really the only centralized place that we can look at the entire United States over all business sizes, types, however many employees in every single state to determine how bad this problem really is. And it was reported in 2023 that there was roughly $12.5 billion of losses due to cyber attacks just in the United States. But again, it's not a requirement to report these, so we're expecting that this can be marginally higher, potentially 15, potentially even 16, 17 billion dollars of losses. But it's helpful to know where these hacks are coming from as well. And many of you have probably heard by now the term multi-factor authentication, or MFA. It's one of the most increasingly popular methods of cybersecurity and has proven to be highly effective. But the reason why carriers like Evolve are starting to require it on more business, anyone that is purchasing cyber insurance, you may or may not have already seen this. If some carriers aren't requiring it, they may provide premium credits or lower deductibles if you have it. There's a huge variety of benefits for implementing strong security controls. And it's because we have data like this. We know that last year, 2.9 of the $12.5 billion of losses was directly attributed to compromised business email accounts. So for frame of reference, getting into your email accounts is, to me, a hacker's easiest focal point to carry out an attack. From emails, they can do a lot of different things. They can download ransomware by clicking on links within your email. They can send emails to other people in your organization to try to move laterally and find access to different accounts. They can try to send emails to other people in your organization or vendors even to try to just trick them into doing things. They really have a lot of power once they get into your email account. So that's why we see a lot of these hacks being attributed to compromised business email accounts. But lastly, I want to remind you guys that hacks are not just happening on large businesses. I think that one of the biggest misconceptions in the industry is this, because all we see on the news is the biggest, most exciting types of attacks. Just 2 months ago, we saw that there was a Fortune 500 company in China that wired a single $25 million payment because there was AI deepfake pretending to be her boss over Zoom. Now, you hear crazy things like that and you think it's only happening to big businesses, but that's just absolutely not true. According to Coveware and the clients that they've observed, roughly 67% of all attacks experienced in Q4 of last year happened on companies with less than 1,000 employees. And even a good portion of this, about 5% of all attacks, happened on companies with less than 10 employees. And so I really want you guys to, if you're going to take one thing away from this, it's that small to medium-sized businesses are actually the #1 target for hack attacks. And I heard of a great analogy a couple of years back that I have never strayed away from because I find it so effective. So if you're thinking of hacking as an analogy to fishing, traditional fishing with an F, not with a PH, hackers are not fishing with a spear. They're not sitting on a dock waiting for a big fish to come, finding it, identifying it, tracking it, waiting for the right moment to strike, and then hitting their target. That is not what hackers are doing today. Hackers are basically fishing with a big ass net, excuse my French, but they're throwing this net into the US economy, which is essentially just the equivalent of stolen login credentials, emails, passwords, phishing attacks, social engineering attacks, different information that they find online, pulling it all back, combing through it to find opportunities or vulnerabilities to strike and firing them off in bulk. They're basically just finding any vulnerability in any business they find and trying to monetize it. It has nothing to do with your business specifically. It has nothing to do with how many transfers you're making. It has nothing to do with how much data you have, what a reliance on technology you have. It is totally random. And we always like to quote the director of the FBI because you would assume that he knows what he's talking about. And he always says, hack attacks are not a matter of when, it's a matter of, hack attacks are not a matter of if, it's a matter of when. He anticipates that every single business in the United States will have been attempted to be hacked in the next 5 years. And we believe it. We see a lot of these hacks go out, and luckily we're able to respond to a lot of these really quickly and use the leverage of our giant claims team to be able to stop them in their tracks almost. But what's happening with a lot of businesses is they don't have cyber insurance, and that means that they don't have a claims team of data breach attorneys, IT forensics experts to jump on it immediately. And they're going to have to try to find their own solution to this problem, and it doesn't happen quick enough. So now we're going to shift gears to look at some of these common cyber misconceptions that we constantly hear in the marketplace. I know John, working with commercial clients, has heard a lot of these. I have as well. And it's always interesting because at least one person in the audience will usually resonate with at least one of these, and all of these are true misconceptions. So I want you guys just to take a couple seconds and read through these and think to yourself if any of these resonate with you.
You had to put my IT provider takes care of that in this one.
Well,
You
it's a
had to do
misconception.
it.
What can we
I
say?
agree.
And, you know, not to be too confused with that, because IT professionals and cybersecurity is 100% necessary. You actually cannot get cyber insurance if you don't have a proper IT infrastructure, if you don't have any cybersecurity. We're not working against each other as kind of the initial hypothesis was years ago. We truly are working together. But at the same time, anyone can get hacked, regardless of how good your cybersecurity is or how in-depth your infrastructure goes. And this was really highlighted in the Colonial Pipeline attack. This is an attack that happened about a year and a half ago, kind of right before gas prices in the US started to skyrocket. We all maybe thought that it was because of the Colonial Pipeline attack. Obviously, later on, it was determined that it was really just the political landscape in the United States. But it is an interesting case study to look at because the Colonial Pipeline had an annual IT budget of over $5 million and over 10 people working around the clock solely on the cybersecurity of this company. And they got hacked and had to shut down one of the major pipelines in the United States for over a week. So no level of cybersecurity makes you impervious to cyber attacks because the number one cause of all cyber attacks is human error. We anticipate that anywhere between 99 and 100% of all attacks that we analyze at Evolve have some aspect of human error in them. But I'm getting a little bit ahead of myself. Why do businesses get hacked? It's important to understand, as I said before, it's not just the businesses that are collecting a lot of sensitive data. It's not just the businesses that are reliant on technology. Businesses are getting hacked for other reasons as well. As I said, social engineering and the theft of funds is the second most common type of attack. So that tells us that hackers are going to go after anyone that's performing financial transactions. If you have a bank account and you're sending and receiving money, you're a target. If you have a human workforce, you can unfortunately fall victim to human error. But the saying at Evolve that we always love to reference is the two basic business operations that create a need for cyber insurance are A, do you have an email account? And B, do you have a bank account? In my professional opinion, if you have both of these things, you should consider purchasing cyber insurance. Because if you have an email account, you can click on a link, open an attachment, or get tricked. Phishing emails can come through. It can be anyone in your organization. It doesn't have to be the owner or the IT director or someone who's a little bit maybe more invested in not making a mistake. Quite frankly, there's a lot of human error and just human nature aspect of falling victim to these kind of attacks. You know, a lot of times people get busy. Maybe they have 100 emails to go through in a day. They stop reading emails so closely. They stop analyzing them so closely. They start responding too quickly. Maybe they're stressed out from a meeting that they just got in and they're not looking closely at who sent them that email or the details of the banking information. People make mistakes, and that's really what cyber insurance is. This human error aspect has a role in almost every single attack, and that's why no businesses are impervious to cyber attacks. So now we're going to switch gears and do a little deep dive into ransomware. And of course, this is important, being the number one claim, but it's also something that most people don't fully understand how it happens. And so to us, we like to first look at the most common ways that ransomware is getting onto your system. And over the last year, we've seen some alarming trends in that the number one most common way for ransomware to get onto your system is now unknown. I'll let that sink in for a second. That has been a trend only over the last year, and we largely attribute it to the fact that there are now new hacking groups popping up that aren't actually conducting the attack. They're just looking for the entry points. They're just finding the compromised login credentials, access points into your cloud, into your email, whatever it may be, and then selling that to a ransomware group for them to go then conduct the attack. Oftentimes, how this plays out is they'll find that entry point months before, and then months down the line, business A gets hit with a cyber attack and it turns out to be ransomware. And the way that a lot of this works is, you know, there's not always that electronic paper trail dating back months to identify where that entry point was. When the IT forensic experts get in there, they're basically looking at the electronic paper trail to say, okay, what happened here? How did the hacker get in? Where did they go? Are they removed now? Can we remove them? Can we close these gaps in security? And they aren't able to do that because the entry point either happened so far ago or the hackers were able to cover their tracks in that electronic database. The number two most common way is RDP compromise. For any of you that aren't aware, RDP stands for Remote Desktop Protocol. And this was a really increasingly common way to virtually work from home or from remote devices during COVID, and it's still pretty popular. It's basically, you know, similar to a VPN, but it allows you to remotely access your desktop from a virtual device, from your own device, or from home. And it's basically just like a doorway directly into your desktop or your computer. So as I'm sure you can imagine, this is kind of a hacker's dream. I want to just be on your computer and be able to do whatever I want. That makes it much easier for them to conduct these kind of attacks. And all they need is just the login and password, basically on just a program on your computer, put in your email, put in your password, and it pulls up your computer. So it's a really easy doorway for them to get into. We always want to see these secured by multi-factor authentication. That basically tells us that even if a hacker gets your login credentials and attempts to log on, they're not going to be able to get in because it'll ping your phone, it'll text you a code, or whatever method the multi-factor authentication uses. It will require a second form of verification to prove that that login attempt is legit. A really, really good security control and cost-effective security control to implement for any business. And lastly, email phishing. So this is just fake emails, very similar to the spam that you see in your personal email, but oftentimes much more sophisticated. We're going to touch on a social engineering example that goes through some of these email phishing templates and what they look like. So I don't want to dive into it too much, but just know that oftentimes the stuff that you see in your personal email, I always reference that the most because there's not a lot of email filtering in your personal email. I personally see a lot of crap in my personal email, just horrible attempts saying I've won a gift card or my Amazon delivery has ordered, even though I haven't ordered anything. Clearly bad attempts. Now, the things that we see that are allowing hackers to conduct these multi-million-dollar claims on clients of ours, they're much, much more sophisticated than anything you can see in your personal email. But staying on the topic of ransomware for now, this pie chart you can see on the right-hand side was provided by Coveware, shows the average industries impacted by ransomware. And moral of the story is we and Coveware see ransomware attacks on every single type of business there is. We even have a large book of homeowners associations in Florida, which in my opinion are not even quite real businesses. You know, they barely have any employees. They're taking very small payments from each person in the community once a month, and then sending small payments out for things like lawn service or people to come in and pick up trash or whatever it may be. We see ransomware even hit HOAs. It happens to every single type of business and every size of business. So again, you can see on the bottom side, the number of attacks happening on companies with roughly 1 to 10 employees was just about 5% of all attacks. So that doesn't seem like much, but knowing that it's a $12.5 billion industry with hundreds and thousands of attacks happening each and every quarter, that 5% starts to look pretty big once you see the entire scope of it. And lastly, we'll wrap up looking at ransomware by identifying what the costs are, or at least the largest costs associated with ransomware attacks. So we talked about how right now the average ransom demand is roughly $568,000 according to Coveware. On Evolve's book, that is nowhere near the largest cost associated with ransomware, which makes it really scary. To us, business interruption is the leading cost. If any of you aren't familiar, business interruption coverage, often referred to as business income and extra expense coverage, is essentially just lost profit reimbursement for your business experiencing interruption. So pretty self-explanatory. And when it comes to cyber, as you can imagine, oftentimes with ransomware or even other types of attacks, your entire business is going to be at a standstill if you're at all reliant on technology. So I like to use an example of a manufacturing company. Once you reach a certain size as a manufacturing company, it's going to make sense to start embedding technology and, for lack of a better word, internet into your manufacturing process to increase efficiency and leverage technology. I mean, we are in the 21st century for all we know. And when this happens, you're basically vulnerable to your entire manufacturing operation being shut down at the whim of a hacker. If it's all connected to the same network and ransomware shuts down your network, you're not going to be able to manufacture any units. And each day that you go not being able to produce a certain amount of units is just going to equivalent to lost profit. So this is the biggest thing that cyber policies are going to be reimbursing for, because it can increase so fast. But it's the same with other types of companies as well. For example, potentially you're a construction company and there are some aspects of your business that you need internet to be able to coordinate. Maybe it's not so much producing units and doing your actual business, but maybe it's coordinating a job site, coordinating with subcontractors and vendors to come on. It can cause delays in your business. It could cause you to miss milestones or checkpoints in a certain amount of time. There's a lot of different ways that being unable to access internet can interrupt your business. And luckily, cyber policies are very broad in their wording, saying that any remedial effects of the cyber event happening that leads to lost profit can be looked at to be reimbursed. But moving on, data restoration is also a huge cost that we see. Oftentimes, ransomware threat actors that don't receive those payments will decide to just wipe your network completely clean. Now, this is a horror story that I want you guys to take a second to kind of think about, because at least for Evolve, if we had everything on our Salesforce, our CRM, our quoting platform, our emails, everything deleted, we would be absolutely screwed. We wouldn't be able to process our renewals. We wouldn't have information on agency appointments to be able to quote new business. We wouldn't have any of our historic claims data. We would be totally screwed. And what a lot of people don't realize is even if you are paying the ransom demand to these hackers, there's no guarantee that your data comes back uncompromised. A lot of times we see that maybe 10 to 20% of your data comes back still corrupted, whereas you got the bulk of it back, but a lot of it still isn't recoverable. So there's no guarantees here. And a lot of times we have to pay employee overtime costs or hourly billables of data restoration specialists to come into your business after a cyber attack and rebuild that data up to where it was before the attack. And for the sake of time, I'm just going to keep going on, but reputational harm is also a large cost associated with ransomware. This works similar to business interruption as we reimburse lost profit, but it's essentially just reimbursing lost profit after a cyber attack happens. And the idea is that your reputation can be damaged. A lot of carriers will say that we're only going to allow this coverage to be paid if you're featured on the news or if there's an adverse media article posted about you. That's not how Evolve does it. We consider this coverage just as any cyber attack happens. There's no extra event that needs to happen, and it can be a huge cost associated with a lot of claims. You can think of an e-commerce company taking repeat customers, maybe, Zara or Nordstrom or any clothing company. If they lose everyone's credit cards information that's been shopping on their website over the last year, that might damage their reputation and sway some individual consumers to purchase clothes or goods from other e-commerce websites. So how this works is we'll bring in a financial accountant and determine if the next 12 months after your cyber attack, you did not realize as much income as you were supposed to, and we can kind of track it back to that cyber event, then you'll be reimbursed for the difference. And I like bringing this up because this is kind of, to me, almost an ancillary or extra coverage that's bolted on to the necessary ones. And there's a lot more things like this that Evolve and other carriers offer, such as the personal bank accounts of C-level executives within organizations. If they lose money, we can reimburse them personally. Money that's held in escrow, money coming in as invoices, the cost post-breach to rebuild your system back up, do gap analysis. Good cyber policies cover much more than the basics. So understanding that you're getting a lot of value from paying for one of these standalone cyber policies, I think is a step in the right direction. Now moving along, I know I kind of drowned out on ransomware a little bit, but it is really important. But funds transfer fraud is equally as important. It's the number 2 most frequently occurring claim that we're seeing. And it's quite simple. It's really just sending money to the wrong place. It can happen to senior executive officers, everyday employees, clients, vendors, and we see it constantly. And to me, the best way to understand this is just to walk through a claim example, start to finish, of one of Evolve's clients and a claim that we handled, to give you a picture of how these attacks are actually carried out. And again, the number 1 cause for funds transfer fraud, also known as social engineering, is human error. Someone almost always has to make a mistake in these examples for the hacker to be successful. And so this example that I want to run you guys through happened on a construction company that Evolve insured. We handled the claim and then afterwards anonymized the information, as it made for a great case study. So the financial accountant of this construction company came into work one day and saw this email pop up in her Outlook. Now, I don't know if you guys use Microsoft operating systems, but this looks like a relatively real email. It's branded as Microsoft. It's coming from Office 365 mail delivery group. And it's basically just saying, hey, as a new security measure, we want to improve our email system. You're going to be required to update your information so that we can enable email encryption. And after talking with John and Cooper on the cyber market and cybersecurity and hearing about all these attacks lately, this seems pretty on par that Microsoft would be encrypting emails now. So unfortunately, in this situation, the financial accountant clicked on this link and went to enable the encryption. That then took her to a single sign-on that looks like this. Again, if any of you guys use Microsoft, this is pretty much exactly what a single sign-on looks like. And this only further reinforced that what this financial accountant was doing was legitimate and it was real. And so she put in her email and her password to verify that this is her, just verify her login so that Microsoft could encrypt her emails. And that's what she did. She typed in her email and password, and it said, congratulations, you are now having all of your emails encrypted. Really, all that this did was just keystroked her email and password and sent it directly to a hacker. So that hacker could now take her email and password, attempt to log back into her email, and it was not secured by MFA. So there was no secondary form of authentication that they had to go through to get into that email account. The hacker was in the email account. And from there, we observed a tactic that is increasingly common among hackers, where in your Microsoft email account, in your Outlook, you can do what's called a rule. And this rule can be a lot of different things. And what we've observed hackers do is write a rule that says anytime an email comes into your inbox containing the word invoice or payment or past due or whatever the keywords in an invoice would be, they'll direct it to a particular hidden folder. Oftentimes, it's actually just the deleted folder. So that hacker sits in the deleted folder, just waits and waits and refreshes until an email comes into her inbox containing the word invoice, and it gets sent directly to them. That hacker is then able to go into that invoice sent from a subcontractor, paying them a certain amount of money for a job that they did, change the banking information within that email, and then pull it back into the financial accountant's inbox. So it's unread, it just got in there. It looks like it came directly from their subcontractor because it did, but the financial accountant doesn't know that the banking information has already been changed to that of the hacker. And so what this led to was a social engineering loss of $93,425. In this specific example, this construction company was building a high-rise building in downtown Minneapolis, and they had a subcontractor that was installing the windows. And so this was a single $93,000 payment that they were going to make for that job. They thought that it was the right person. It was the right person's email. It was in a thread that they had already responded in. They had been communicating about this, but it had been intercepted and the banking information had been changed. So that's why it's really important to implement checks and balances into your everyday business practices. If you're ever receiving a request to send money to a bank account that you have not sent money to before, the standard practice should be to pick up the phone and call the person who made that request and say, hey, John, I've never sent money to this account before. We've sent money to you before. Did you guys change your banking information? Is this real? And John would say, no, do not pay that. We did not change our banking information. We've had the same banking information for the last 5 years. And that can help you save against losses like this. Again, $93,000 out the window. Luckily, they were insured by Evolve, and we covered these incidences up to $250,000 at minimum. So they had high cybercrime limits. They didn't have any conditions saying that you had to call them and verify that transfer. And that is a really common aspect among bad cyber policies. Unfortunately, the biggest insurance carriers and companies in the world, if you guys have heard of them, Chubb, Travelers, Beasley, Philly, Cincinnati, they do everything so well that they don't feel like they need to do cyber that well. Cyber is really volatile. It's pretty scary as an insurer. Losses could be through the roof or it could be super healthy. We don't quite have a grip on what claims data looks like yet, since it's such a new emerging line of insurance. And some of those big markets, while they have the brand name recognition, they'll put a condition on your policy and say, we're only going to give you social engineering coverage if you call to verify requests to send money to a new bank account. Well, gee, if I did that every time, I don't think I would lose any money. And I always like to point that out, not because they're doing all of these things wrong, but it's because there's options out there for your business that are not more expensive, that don't have those warranties on the policy. So if you're analyzing what a good cyber policy covers, you want to have cybercrime coverage that would be inclusive of things like social engineering, or AKA funds transfer fraud. You want your limit to be high. You want it to cover potentially every transfer that you would make, or at least your largest transfer. And you want to make sure there's no conditions or warranties saying that you may not get coverage unless you do certain things. Those are totally unnecessary and can cause nightmare scenarios in the event of a claim. Now, the last slide that I have for you guys, and the last example that I have for you guys, is this, just an alternate way to look at how social engineering attacks can be carried out. This was another example from Evolve's book that happened on a private school where the financial admin fell victim to a phishing scam releasing their email credentials. It actually happened in the same way as the last example, but it got carried out a little bit differently, as once the hacker was in this financial admin's email, they searched around and they found a spreadsheet of all the parents' contact information and how much their outstanding balances for tuition was. They then sent an email to all of these parents from the financial admin's email saying, hey, we're approaching summer. You guys aren't required to pay your tuition in full yet, of course, but we're looking to put in a renovated gym for the kiddos, and we're looking to raise capital for that now. If you guys pay your tuition now, we'll knock off 20%. And that led to 6 parents mistakenly paying tuition directly to this hacker's bank account, which totaled to $60,300. So you can see there's different ways and angles for hackers to kind of pose this, and you leverage the information that they find in your email to find anyone to extort money out of. Again, they're not picky, they're not choosy, they're not targeting. It's totally random, and they're just pursuing the money. So that is all I have for you guys today, but a couple of final talking points before I pass it over to John and Keegan again is I want you guys to understand that the cyber market is evolving. The requirements of a small to medium-sized business to even qualify for a policy from Evolve or any other carrier is changing by the quarter. We didn't used to require MFA on businesses below 50 million in revenue. Now we require it on all businesses above 25 million in revenue. We used to be writing law firms, now we're not. Things are changing as claims are coming in, and we have a chance to analyze what businesses are bad, what cybersecurity protocols are effective. Things are changing constantly. But the important thing to know is that small to medium-sized businesses are the #1 most frequently targeted type of business for hack attacks. I've seen claims on companies that are in the nonprofit sector with only $500,000 of yearly donations. They are not picky about the types of businesses they're targeting. So just remember as well, John is a local resource. He knows a lot more about cyber insurance than a lot of risk management advisors out there. It's not always something that your insurance agent or broker focuses on, but it really should be. And so with that, I will kick it back over to John and Key, and thank you guys so much for your time.
Thank you very much for putting all that together for us and covering it. A couple, I was going to say I didn't have much or see anything in the Q&A, but a couple questions that did come up or I've been asked in the past that I think would be good to quickly share. Is it true that a cyber policy is kind of different than an auto policy? Where like, does Evolve want somebody to always open a case, whether it turns into something or not? Or is there a penalty for somebody to start a case and then, it turns out it's not as big of a deal. It's not something that's going to go through to make an actual claim. How does that work?
Yeah, that's a great question. And to be quite honest with you, I have had zero experience in any other insurance other than cyber. So I couldn't even really tell you what an auto policy looks like. But what I can tell you is that you are correct. We want every single one of our policyholders to report anything that is even questionably suspicious. We have a $0 deductible on our 24/7 incident response hotline. It is managed 24/7 by data breach attorneys who work under attorney-client privilege. And we will not charge you to kind of use that breach coach, use that hotline to understand, hey, this incident happened. I can't tell if I'm breached or if it's just an email and I can just delete it. Whatever the case may be, call the hotline and let the experts take care of it. It's not going to cost you anything until we determine, yes, this is something that we need to bring the team in to investigate. You'll start to incur costs at that point. It would be, if you're with Evolve, all of that's covered anyways. So you're not incurring costs directly. It's not covered by your insurance policy. But ultimately, how I like to sell cyber insurance is a peace of mind insurance product. It's a really scary trend at how many businesses are getting hacked and the size and scope of these losses. And almost nobody has a full grip on the situation and works and what doesn't and who's going to get targeted and who's not. And it's really scary for business owners, especially small business owners that have a lot to lose. And so we always sell peace of mind knowing that Evolve is one of the policies that will cover the most types of costs associated with any type of claim. And also, you just call our experts anytime something is going on, let them handle it, and don't be the one to make the judgment call that nothing has happened when maybe it has. So again, long way to answer. It is completely free to call our hotline and get advice from our experts.
Yeah, that's good to know. Oh, go ahead, John.
Yeah, that's okay. Yeah, I was just going to add, completely agree, right? It's not like other losses, like a fire where it's pretty obvious what's going on, but the ramifications of it are significant. So, definitely, report everything, to your local agent that you work with, and obviously, hopefully, through the presentation today, we provided a little education on, that it is happening to folks like you. If you get a scary email, report it to Keegan, however that's structured, with your team, just take this stuff seriously because it's very important.
Yeah, we've got the full security desk, ready to go and step in. Obviously, we want to leverage though free resources, zero cost resources that Cooper kind of mentioned there. Well, hey guys, I appreciate you taking the time with us, John. Again, with Visance, local resource here for you guys. I know we've got a couple of customers, a couple other prospects here on the webinar this morning. I really want to advise, Ontech, the reason why we put this on is we are not an expert in cyber insurance. Obviously we're a cyber company, we're an IT company, but at the end of the day, we're not an insurance provider, we're not a carrier. We don't understand a lot of those upstream, downstream functions that somebody on like a risk management practice does. So again, really, if you guys have part of the closure today, you'll have John's contact info. If you need it, contact me. More than happy to put him in touch with you guys. John, any closeout stuff you wanted to do before I wrap us up today?
Yeah, no, just, I'm here, happy to help. And just thank you for allowing us, Keegan, to help educate today. It was great.
Perfect. And with that, Cooper, John, thank you very much for joining us today. We appreciate it. And thanks everybody for joining. Have a great day.
Thanks, everybody.
Thank you.